Okay, let's unpack this. We're taking a deep dive today into something quite surprising that happened recently with global coffee prices, specifically August 2nd, 2025.
Right.
And this isn't just about, your morning cup. It's a really fascinating look at how things like trade policy and maybe even just information noise, plus global supply chains,
Mm-hmm. Mm-hmm.
how they can really impact a commodity we all, well, most of us, love.
And what's fascinating here, I think, is just how quickly markets react. And let's be honest, sometimes overreact to what they think is happening.
To perceived information.
Exactly. So we'll try and help you understand the unexpected twists behind this volatility, especially how one specific U.S. tax policy announcement really sent shockwaves.
And those shockwaves, they were pretty immediate, weren't they? London Robusta, the September futures, they dropped nearly 2%.
Almost 2%, yeah. And New York Arabica saw an even bigger fall, over 3% down.
Wow. That's quite a jolt for just one day.
It really is. And the core reason, the trigger, was the market reacting to the U.S. bringing in a trade reciprocal tax.
Okay, what is that exactly?
It's basically a tariff designed to mirror taxes that other countries put on U.S. goods. But here's the kicker. There is a lot of, let's call it, information noise. Earlier reports, widely circulated, were saying this tax would be a massive 50% on Brazilian coffee. 50%. But the actual tax applied? Just 10%.
Wait, that's incredible. So the market tanked because the tax was less bad than feared. That sounds backwards, like misinformation made the biggest splash.
You got it. That's exactly it. The initial fear, the rumor of 50%, had actually driven prices up beforehand. Speculators were betting on tighter supply, you see.
Okay. Anticipating problems.
Right. So when the reality hit just 10%, those same speculators scrambled to cash out, liquidate their positions, take their profits. That caused a huge sell-off.
So the price dropped because the perceived risk just vanished.
Precisely. The market course corrected, you could say. But not without causing quite a stir first.
And this wasn't just abstract numbers on a screen in London or New York, was it? This hit domestic prices, too.
Oh, absolutely. Look at Vietnam, a major Robusta exporter. Their domestic coffee prices dropped by 1,200 Vietnamese dong per kilogram, pretty much across the board.
And that pushed prices
Into the 98,800 to 99,000 dong range. So crucially, below that psychologically important 100,000 dong mark.
Wow. Yeah, that really brings it home. It affects real people, farmers, businesses.
Definitely.
Now, obviously, the tax confusion was the main event, but markets rarely move on just one thing, right? Were there other sort of macroeconomic currents at play?
Good point, yes. In the U.S., you had the PCE price index that's a key inflation measure.
Right, personal consumption expenditures.
Exactly. It had jumped up pretty sharply for the second month running, which
Yeah.
suggests, well, inflation is proving a bit sticky.
Meaning the Fed probably isn't rushing to cut interest rates anytime soon.
That's the implication. And higher rates, or the expectation of them, usually mean a stronger U.S. dollar.
Yeah.
And a stronger dollar generally makes dollar-priced commodities, like coffee, more expensive for buyers using other currencies. So that added more downward pressure.
Got it. And what about the supply side? Anything happening there?
Well, Brazil, the giant producer, they were having a pretty good harvest, stable exports. Honduras actually saw a big jump in its June exports, best since 2021, I think.
Okay, so decent supply from some key players.
Yeah. Interestingly, Colombia's June production was down sharply, like 22%, due to bad weather. Normally, that might boost prices.
But it got drowned out.
Completely overshadowed by the tax news and the resulting sell-off.
So wrapping this up, what does this all mean for you listening? I think this deep dive really shows how dramatically a global market like coffee can swing based on perceived policy changes. And especially information that gets, well, muddled. We saw those big drops in London, New York, and right down to Vietnam. The impact was immediate.
And if we connect this to the bigger picture, it just powerfully highlights how incredibly sensitive commodity markets are to policy signals, accurate or not.
Right.
That initial panic over a potential 50% U.S. tax on Brazil, which then turns out to be just 10%. And get this, Brazil's own coffee council, Secafe, thinks they might even negotiate it down to zero.
Wow, really?
Yeah, potentially. But that initial alarm, fueled by how fast information, even wrong information, spreads now, it created this massive swing. It's a strong reminder of how speculation and sentiment can hit global prices hard, affecting everyone from the farmer to, well, your cup.
And here's maybe a final thought to chew on.
Yeah.
Think about how much of what we know about trade or really any complex issue often comes in those first headlines, right? Versus the much more nuanced reality that emerges later.
That's a great point.
What other things in your daily life, what other items might be affected just like this by that mix of policy and information often flying under the radar? Something to think about.